You know, in golf, a 300-yard drive counts the same as a 2-inch putt. And it works pretty much the same way on Wall Street. Remember yesterday, a nearly 200-point rally pushed the Dow into record territory. Today, a mere 6-point gain did the same thing. The Nasdaq and the S&P also closed at record highs, but the moves didn't come easy. Stocks this week wavered between gains and losses. But in the end, help came from trade optimism, earnings momentum, and decent economic data. Today, as I mentioned, the Dow rose by 6 points. We're now at 27,681. Nasdaq was up 40. The S&P added 7. In fact, all the major averages were higher for the week. The S&P finished its 5th consecutive week of gains. But the big question for investors now is, can stocks move even higher? And as Bob Pisani reports, the answer may lie in the bond market.
Beyond the rally in the stock market, we've also seen a rally in bond yields. The yield on the U.S. 10-year Treasury note has risen sharply over the past 7 days. Investors haven't seen that kind of move in bonds since before the 2016 presidential election. Now, this recent spike in yields has pushed bank stocks back into a leadership position, with regional banks like Comerica and KeyCorp hitting new highs, while utilities have slumped 4%, and the much-loved home building stocks, well, they're down anywhere from 2 to 8% for the month. But more importantly, it's finally given some credence to the bond bears, people who think bond prices are too high. The big question is, how sticky is this rally in bond yields that we've seen? Well, it's hard to say, but if a long-term U.S.-China trade deal reducing tariffs emerges, it could be sticky. The decline in bond prices could force more investors into stocks and provide fuel to give the rally some additional legs going into the end of 2019. Now, keep in mind, a few key factors have led global bond yields to stay low for longer. We have aging populations, we have lower yields in exchange for safety, we have global central banks and policy uncertainty, the uncertainties around trade and the 2020 election. So you've also got demand still outstripping supply for bonds globally. No one's expecting a revolution in bond prices, but it's gotten some traders buzzing about what might happen if this trend continues a little bit more or gains momentum going into the end of the year. And like I said, that could be a help to the stock market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.